Ross Gerber is with us, President and CEO of Gerber Kawasaki Wealth and Investment Management. They have about $2.2 billion in assets under management, including about $84 million worth of Tesla stock. You folks know him well. He owns Teslas. He invests in the company. He sells at times. I do want to start with you, Ross. Are you concerned? Stock's still down about 2.7% in the aftermarket, but when Tesla says 2024 volume growth may be notably lower than 2023, I don't know. Does it worry you a little bit? Does it make you want to sell any stock?
Well, I don't want to talk about our trading because I'm not allowed to, but if you look at our, my fund GK, we've been selling the stock over the last several months, as well as if you look at our public filings, we've been lowering our position over the last several months. So there's a lot of clients of mine who are very upset with some of the things Elon said and sold their stock in the $250 range that are probably pretty happy they did that today.
Ross, stick with this for a minute because you've been pretty critical of Elon Musk lately, which has been a marked difference from how you've been over the past few years. I mean, you were among the biggest Tesla bulls out there, but now you're concerned. You write that Elon's becoming the Kanye of business. Is this what's hitting the company's stock, or is this a bigger question about what we were talking about earlier with EVs, EV demand falling, and what we're seeing from Ford, what we're seeing from GM? Is it a bigger issue outside of Elon's control?
I think Elon's created the issue for EVs across the board more than it's an EV issue. But, the bottom line is, and you see it in the numbers, and this is what we were kind of waiting to see, is that margins continue to go lower. They're basically not able to sell cars unless they lower prices because Elon refuses to advertise. And then the advertising he's doing are trips with his child to Auschwitz and, anti-Semitic and racist comments all the time, and him, basically using X as a platform for every political debate possible that he could get himself into, which is exactly how you not sell cars. So God forbid they actually got him off Twitter and advertised, maybe Tesla's problems would be solved.
Interesting. Hey, I want to bring you in, Red Brown. Things that you're seeing and noticing. We've been breaking down the earnings with our TV colleagues. The key point that you're focusing on.
Well, I think obviously the production target, notably lower volumes for next year, it does raise some questions about this strategy of continuing to lower prices. They lowered prices just last week again in Europe, so it seems like that is going to be the strategy going forward, but it doesn't seem to be kind of paying dividends in the company's view going forward in terms of actually selling cars still.
Yeah, and Tesla less bullish on its Cybertruck, noting in the investor deck that its ramp time will be longer than for the other models given its manufacturing complexity. So it's also adding that. All right, Ross, so can definitely, respect your different tone here in Tesla. So I don't know, how do you think about this company going forward? Is it a case that it's hard to kind of remove the man and the creator from kind of the company, but how do you do that? Or do you do that at some point?
Well, what I've been saying is that the Tesla story has just changed from what the story was a few years ago before Twitter. And as long as investors are comfortable with that story, then the long term for Tesla, the story is still intact, whether it be charging, energy, EV. Tesla's the prime player in this climate change revolution that they began. And the real issue is the company is being mismanaged now by the CEO, who's demanding a massive compensation package, but won't do any of the things that the company needs to really resolve their sales and margin issues. So I think as we move forward as investors, it's really about what is the right valuation for Tesla, because Tesla's been the highest valued of the Mag 7 or one of the highest valued tech stocks for years, and before he bought Twitter, it traded 100 times multiple of future earnings. Today, it's trading at 60 times multiple of future earnings. But now that future earnings number is definitely in doubt. And does it really deserve a higher multiple than NVIDIA and Microsoft? And I think that's what's hurting the stock, irrelevant of the company.
Stock's still down about 2%. Hey, Tesla also noting, Ross, that they have reached the, quote, natural limit of cost down of our existing electric vehicle lineup. It's kind of corporate speak, but what does that mean?
Euphemism for we can't lower prices anymore?
What does that mean?
It's like have reached maximum efficiency of production. And so basically every time we discount, it's just going to cost shareholders more. Now, the good news is this is great for Earth because people are getting cheaper and cheaper, EVs, which, are great. The bad news is it's coming from shareholders' pockets. And so if you're a shareholder, it's time to really assess, does this company deserve a 60 multiple of forward earnings? And I think that's what investors are going to be doing over the next several months.
Okay, I want to bring back in Red Brown because he's been watching the numbers come out. Red, what else sticks out to you? I know the looking at the production numbers certainly sticks out. Anything else in these numbers here? We're seeing shares down about 2% as we speak.
I think everything that we're seeing right here from the numbers is that this is kind of the cost you pay for the game that they're playing of continuing to cut these prices. Yeah. You're seeing a bigger and bigger disconnect between their top line growth and their earnings growth, right? They did hit record revenue. That's going to get lost in the shuffle here today. But it came at the expense of over 40% drop in their earnings, right? So it doesn't seem like it's the path forward. I think Ross is hitting on some interesting topics here as well, as kind of where does the growth come from? A lot of the share price is predicated on some of these sort of pie in the sky initiatives, be it AI, huge question marks over that, right, with whether or not Elon does that inside the company or not. So hopefully get some more insights on that when the call goes later today.
Ross, what is the number one question on that call today in your view?
I think from my perspective, it's kind of what we're hitting on right now, which is where's the growth coming from? If you're not going to grow cars by a lot, this is not a good thing. So I think my concern is 4680, and this is the story behind the story, which is one of the scaling issues they're having with cyber and semi is that 4680 is just not working as quickly as they had hoped. And they planned all of production in Texas around 4680 originally, and they've now had to pivot. And so this has caused extra costs, lots of complexity issues, and I don't think they've mastered 4680 yet, or even close for scaling at any mass level. And this is a huge detriment to Tesla moving forward because they have to get this technology right to ramp cyber and semi, which is where growth will come from.
Hey, 20 seconds really quickly. What do you mean 4680 really quickly?
These are the new cells that that they built for EVs. And these new cells are 7 times more powerful, much more efficient, charge faster, and they're wonderful, but they haven't been able to scale them as quickly as they'd hoped.
All right, good stuff as always. So appreciate it. I know you've had a busy day. Our thanks to Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management. And then, of course,